All right, so we're going to get started today. We're going to first go through our disclaimer that's going to tell you that pretty much everything you hear today is for educational purposes only. I'm not giving you any trading advice. I want to make sure you understand that trading is very risky, and you may and probably will lose some or maybe even all of your original investment in trading capital. Only trade with capital you can afford to lose. Past performance is not necessarily indicative of future results. Okay? So why pullback trading? Why this whole thing that we're talking about, these pullback trades? So for one thing, when I was struggling, my issue was that I had the emotions that I had with trading were just eating me alive. It was really difficult for me to understand how almost every decision I made seemed to be wrong, and how every day seemed to be a losing day, until that occasional day where everybody has just hit it out of the park. Okay. And now we start looking for that adrenaline rush again and again and again. So my trading life was overrun by emotions. So that's one of the things that when I came up with this, I wanted to figure out, how can I have fewer emotions? Well, the way I can do that is by lowering my exposure, meaning getting in and out of trades before I have time to have to worry about managing my emotions. So we get very low exposure. And what that means is we're in and out of trades sometimes in just a few seconds, because we have found an edge and we know that something is going to happen right now. So the market conditions are immediate, right? Meaning that, think about like a bouncing ball. When you drop a ball and it hits the floor, the response to that is immediate. And that's what we're looking at. We're reading all of the conditions that are coming into the market right now, so we can anticipate what's going to happen right now. Okay? So this makes for a much less stressful type of trade, and it's easier to master because you don't have to try to figure out so many different things. There's so much information in the markets, and you don't have to master everything there is to know about day trading. You only have to master execution of your trade plan, and that's something that you can practice. And that was what was missing for me. I didn't know what to practice. I didn't want to spend time practicing, because for all I knew, I was practicing the wrong things, or that whatever I was practicing wasn't going to work anyway. This is a proven over the last 16 years that this is an edge. We have an edge. We've proven it over and over. In fact, after we get through this presentation, I'm going to show you some numbers over the last 5 years. Okay, that could be pretty illuminating for you if you haven't seen this. So what are we looking for on our trades? Why is this so straightforward and easy? We're looking for a confluence of a specific set of events or market characteristics. Now, there are a lot of trading systems out there that are based solely on momentum, or solely on exhaustion, or solely on order flow, or solely on volume. So there's all kinds of trading systems out there that are based solely on each individual thing that we are reading inside the market, okay, and on reading inside of every single bar that we trade, which are all 1-minute bars. So we're reading every single tick, and we're reading all of the conditions that are going on inside of the bar that are important for us to know when a potential trade is setting up. Okay. So we're looking at momentum so that we can anticipate exhaustion. We covered the momentum in the Ninja Trader event. If you haven't seen it, there's a link in the email. And you can also go to our videos page on our website and watch that again. So we covered momentum and exhaustion. The rate of processed orders. This is how we're picking up where the big boys, where the momentum traders, the HFTs, the quants, the hedge funds, all the big boys that have the big money with the all the equipment, and they're next to the exchanges or inside the exchanges, and they are given all these allowances to be able to process these orders very quickly so that they can provide liquidity to the market. So the exchanges allow for them to do these things to provide liquidity so that we have something we can be doing, so it doesn't just dry up. So we want to see the rate at which the orders are being processed, because we are being manipulated. Everybody knows this. You saw the 60 minutes thing on the quants and the HFTs that are manipulating the market. So we're looking at the rate of processed orders so that we can tell where the big boys are acting and reacting, okay? We're also looking for a churning type of volume inside of each and every bar, meaning if it's churning, that means at one point in the bar, it's moving strong in one direction, either up or down. And then when it hits a certain level, that's where it starts running into some resistance of people that are sitting there waiting to do the opposite. Okay, so if the bar's running up at the top of that bar, suddenly the sellers start jumping in and the buyers and sellers are starting to fight. Well, that's a churning volume, and we can see that if we know what to measure and how to measure it. We can see that the buyers and sellers are now fighting with each other. So we're not just looking for volume in general. We're looking for a particular type of volume. Okay. So we're also looking for, by the way, I'm going to show you examples of all this stuff. This is just to kind of get you ready for what's coming up. Okay. So we're looking for a bar that is much larger than most of the previous bars. Okay, so we're looking for either an up thrust or a down thrust bar. We like to see it hit major lines of support and resistance. Okay, that really helped. That's where we started this whole pullback trading, was when I noticed that if price approached lines of support and resistance in a real strong way, with one of those up thrust or climax bars, then there was a good chance that price was going to react to that support or resistance and pull back at least a little bit. So that's what started me on the whole hunt on this pullback trading stuff. And then, of course, the divergence. That's the key that really unlocked this whole trading system for us. We were doing pretty darn good without divergence before we added divergence, and then we just started killing it. Okay, so let's take a look at what that looks like. Okay, all right, so this is what an ideal trade setup looks like to us. In fact, those of us that trade this system, when we see this, we look at this picture. To us, this is the most beautiful thing you ever saw, because we know what's happening here. We know exactly what's happening here. And this is what we're looking for every single day. And we get, on average, about 6 trades a day in our trade room trading session, which is 9 a.m. until noon Eastern time. Okay. So, how do we qualify this trade setup? Okay. This is what you're here for. This is the training. Before anything is happening, we have price channeling. Okay, see this channel? Price is just kind of drifting around. And look at the size of these bars. What does it look like that's happening here? It looks like nothing, right? When we are trading and you're trading, and traders are just sitting there looking for and waiting for opportunities, This is boredom time, right? This is when we all start to drift off and go to Facebook and YouTube and whatever because we're getting bored because price isn't doing anything that we can specifically react to. Truth is, there is stuff going on here. And it's going on. It could be, and this is also in the Ninja Trader event, this could be an area of accumulation or distribution. We don't really care about this. We just know that this is typically the beginning of a setup for us. Okay? So it's easy when you look back when we're starting to see that we're in a channel and then suddenly outside, these bars start breaking outside of the channel. And look how hard they move. Even the size of this bar is bigger than these bars. So we're going to break out of a channel. This is really easy to see once your eyes are trained to see it. And that's just, again, that's just practice. You just practice seeing when there's a breakout of a channel on with a bar that's bigger than these bars. Okay? So we're breaking out of the channel. And the bars are a bit bigger than those bars, those previous bars. Momentum increases. See how we have green and red bars? These bars are black and then turn gray and then get grayer or lighter to the point where they're almost white. And the lighter in color, this is our meter indicator. The lighter they are in color, the more imminent the pullback. Okay? The more imminent the pullback because exhaustion is going to be setting in. The thing we know about momentum is that it cannot be sustained indefinitely. Right? Go look at any trading chart. Momentum cannot and will not ever be sustained indefinitely or for an extended period of time. Why is that? Because other traders are in the market looking for places to take a profit. When you get a strong momentum like this, unless it's motivated by a news event or something like that, or a market open, scheduled news event or unscheduled news event, sometimes and lately, something comes out in the news, I don't know, something about the tariffs or whatever, and can motivate this heavy buying and selling. But generally, when we get these up thrusts like this big hard push up, this strong momentum, it's actually done on purpose by the people that are making all the money off of us, okay, the big boys. And that's what we need to know, because these larger bars are pointing to the fact that exhaustion is going to be setting in, and these ticks are coming into the bars very, very fast. When I say ticks coming into the bars very, very fast, what that means is orders. Remember I said that we're watching the rate at which orders are being processed through the exchange. There's a lot going on. No magic, Vital. There's no magic to this, but we spent a lot of time and effort and energy and money to develop a very simple indicator to tell us when something very complicated is happening, because that helps us to make quick decisions. And that's what this is all about, being able to understand what's happening very quickly and react to it very quickly. Okay? So this is telling us that the ticks or the orders are being processed through the exchange. These aren't standing orders. These are orders that are actually being processed through the exchange. When they reach a certain level, that it is highly unlikely at the rate at which they're going in that us little retail traders are able to attain that level, then that means it must be something else. It must be a mechanical manipulation of some sort. These, like I said, these market makers, that have the ability, because they have all the money and all the equipment to do it, to move the market. Okay, so we're going to look for that. Now, what comes right behind momentum is exhaustion. So when price becomes overbought or oversold, what does price typically want to do? It wants to rest. And what I mean is by resting is these are levels where traders are going to start taking profits, which is going to become overbought or oversold. This pink outline is another indicator that makes it, we put it right where our eyeballs are looking. We don't put it down here. We don't put it on another window in NinjaTrader or anything. It's right where our eyeballs are looking. We know the instant that this bar becomes overbought. And so for overbought, it's a pink outline. For oversold, we have a blue outline. So it's very important to us to know that after strong momentum, price has become overbought, which tells us that we can expect some exhaustion. This is where the churning action comes in. There's buying and selling. This is our pullback alert. Again, there is a lot going on behind this indicator right here. It's not just a random dot. This tells us that there is churning, meaning that all the ticks that are coming in, and this is what we're measuring, Vital, all the ticks are coming in, and they're buy, sell, buy, sell. That's how we're reading it. We're not reading how much buying versus how much selling, because that doesn't tell us the information we need. We want to know when price starts churning. Because if the non-exhausted sellers are jumping into some exhausted buyers, the non-exhausted sellers are more likely to win there. Okay? So then the bar slams into a line of major support and resistance. Okay? And then opens below that with divergence. Okay? So this rockstar actually contains this indicator inside of it, along with this indicator, along with this indicator, are all inside this rockstar to generate this signal. Okay, so this is a combination of indicators to generate a signal. Now, get a lot of emails, a lot of questions. Well, can't I just buy the rockstar? Well, you could. But you don't have any type of indication that something's about to happen until it does. So if you're not using this as a system and you're seeing the Mo meter, you're seeing the overbought, oversold, you're seeing the pullback alert, you're seeing the speed tick, we're getting ready for a trade that you'll hear me in the trade room say, okay, I'm waiting for, or I'm watching the CL or whatever. That's probably the RTY. Yeah. So I'm watching the RTY. And that'll be, I'm watching this countdown timer, right? And that could be within the first few seconds of the bar. It may be towards the end of the bar. But I will, when I see this, I'll come on the mic in the trade room. I say, I'm watching the RTY. If the next bar opens with a rockstar, I'm going to short it. So then the next bar opens, and that's where I take my short, right there. Okay? So that's that simple, very simple trade setup. Now we have another one. Oh, no, let's talk about the actual trade entry. Now, this is a practice session that I was doing, and this is a trade setup, and this is the way it happens. So I was going to show you what it looks like when I place my orders. Okay, so here's a little video of me placing an order on a practice session. This was practice, but this is what same thing I do live. Okay, let me start this. So we're watching price. We're watching and waiting for the open of the next bar to make a trade decision. The bar opens with a rockstar. I put on my order. The very first order got filled. The other two did not. Okay. So, but let me show you the logic of this. So I placed my order, and you don't have to trade with multiples. You could just put the one order on. So I placed my order here, a limit order, because that's where the price was. And then I immediately, in case price had a little bit of push still left in it, on this particular trade, price turned right around and dropped like a bouncing ball. They don't always do that. Sometimes they have a few more ticks before it turns around. So for me, because I trade multiples, and I've been trading this thing for 18 years now, we've been promoting it for 16 years, but I've been trading it for about 18 years. So I'm pretty good at placing trades, but I still practice at it to make sure that I stay, to where I'm unconsciously competent, meaning I can place trades and do this without thinking that much about it. I know what to do and when to do it. And it's not that hard. You just got to practice a little bit to get to this point. So I put on a couple more trades just in case there was a little bit more steam left in this move before it changed directions. As it turns out, it changed directions immediately, and I got out of this trade with, I hit my target. All right. So that's what it looks like. Now, we place our trades for a lot of reasons. We don't use Chart Trader. I know a lot of you like Chart Trader because it's easy and you can see it on the chart. This right here is not. A lot of people get confused and they think this is the signal of our trade. This is not. This is called the OTS. This just tells us, it gives us a visual representation of if we got into a trade on the open of this bar, right, which is right here, how far you have to go to hit your target or your stop, which is a 5-tick target and a 7-tick stop. So we don't have anything to do with Chart Trader on here. Chart Trader is great if your entry doesn't need to be very exact. And your trade management is basically you just wait for it to hit your target. I mean, you can do trade management, but you can't do it very quickly or efficiently. Also, and especially with the type of volatility that we've been seeing in the markets the last few weeks, you cannot see volatility like we're having now on a chart the way you can see it on a trading ladder. Okay? The reason is charts have a zoom factor. They zoom in and out. So that means every tick up and down is a different amount, different size. The price will move a different amount based on the zoom factor of the chart. You cannot get if charts are zoomed out a lot like they have been lately, you might see these tiny, tiny little incremental moves on a chart and not really understand how jittery and how jumpy price action is actually happening. And you might get into something and you get completely whipped out of that trade without even realizing what has happened. If you use a trading ladder, the thing about the ladder is these cells are all the same size and there is no zoom factor. So a lot of times what happens is price will jump from here to up here without any visual being able to watch it climb from here to here. It just jumps from here to here. You won't see that on a chart. You won't know about that volatility. So it's very important for us to trade using a ladder, a trading ladder. You can try it on a chart trader, but you won't be as efficient with that as you would be with a trading ladder. All right. Targets and stops. Okay. So how do we trade this? Remember I said this is low stress, low exposure. We want to get in and out of trades in a hurry. So we use a bracket order for every trade that we get in. Okay, that's the ATM, the Advanced Trade Management. So we have our target and our stop preset. Our target, now this is mine. You can certainly adjust this if you want, and some people have. I have been doing this for a really long time, and I'm very comfortable. I gained no traction in my trading until I started doing these hard targets and saying, you know what, I'd rather put money in the bank than try to get more and more and more and more. I started out just going, gee, I wonder if I could end the day as a winning trader. Just winning trader. That meant if I won $1, how many days could I end as a winning trader? That's how I started turning my trading around. I stopped thinking about making a lot of money, and I just wanted to see if I could end the day as a winning trader to prove to myself that, yeah, you can win at this trading thing. So I wanted to create a foundation of winning, and then we moved on from there. So that's where the 5 ticks came from. Now, like I say, it's a hard target. We don't move the trade out or read any of the market conditions thinking, okay, well, today is a 5-tick day. Yesterday was a 10-tick day. All right, so no, we don't do that. It's 5 ticks, hard target every day, every trade. Now, we do manage our stops, meaning if the conditions that got me into the trade have changed such that I would have never gotten into this trade under the current conditions, I'm going to start moving my stop smaller. We never, ever, ever, ever move our stops further out. That's a big no-no. We only make it smaller because the conditions are no longer in our favor. We don't have the edge that we had when we got into the trade. The conditions have changed. We no longer have the edge. So we want to try to exit the trade as gracefully as possible. So, of course, price could still go in your direction. So we don't just jump out of the trade. We just don't mark it out of the trade and mark it as a loser. We're going to shorten our stop. And a lot of times as I'm shortening my stop, price will eventually turn around and go ahead and hit my target. So I'm managing the stop. So a lot of times, we always start with a 7-tick stop, but I might take a 5-tick loss or a 4-tick, 3-tick, 2-tick, whatever I managed my stop to. A lot of times it gets managed right to break even. We don't do runners and we don't do trailing stops. Again, once you've figured this out, once you've learned and mastered the trade setups, if you want to put on runners and trailing stops, by all means, give it a shot. I like to just sit back and relax. I'm not trying to squeeze blood out of a rock. I know where my sweet spot is, and this is what I do every day. I just want to make a regular and consistent income. That was my mission, regular and consistent income. And I can do it at that without runners and trailing stops. Plus, I'm much more relaxed at trading than trying to work it to death. Okay? So here's another trade setup. It looks a lot like the last one, right? And this one's called a naked rockstar. The reason it's called a naked rock star is because you may notice the difference on this one than the previous one. There is no line of support or resistance right here, right here. This, like one of these lines. There is no line there. That line is something that we consider as a kind of a protector of the price to keep it from blasting through. That's a resistance line. This, somebody in the trade room many years ago called this setup a naked rock star because it didn't have the protection of the line behind it. So what we do is we change the rules just a little bit for a naked rock star that doesn't have support or resistance behind it. But the conditions are very much the same as it starts to set up, right? We're looking for prices channeling. The bars are relatively small. The breakout bars, we have momentum. We have the bars becoming larger. And again, the ticks are coming in much faster than is likely us little retail traders on our PCs are able to process orders. So that means that the big boys are in there now. That's the footprints they leave behind for us. The bar becomes overbought. Okay, again, that's that pink outline. And buying it, and or the volume is churning. Now, previously in the rockstar trade, you didn't have to have both of these, okay, or one or the other, as long as we had resistance there. In the naked rockstar, because we don't have resistance, you're going to have overbought or the pullback alert, or both, preferably both, okay? So there is no major support and resistance, but we do have divergence. For those of you that don't know divergence in simple terms, when prices is on a trend up, right? This is up trend right here. Then typically when price is running, when everything's just running typically, momentum and price are moving in the same direction. But we have webinar that we've done strictly on divergence, and if you want to see that, let me know and I'll send you a video of about divergence. But what happens is momentum changes directions before price, and price will almost always make corrections to try to catch up with momentum. So that's why divergence, price and momentum have diverged from each other, meaning they're moving in opposite directions, and price will try to turn and catch up with momentum. That's why divergence is so important to what we're doing. Okay? So this is actually a large portion of our trades are this one without the support and resistance. We take naked rock stars a lot. That's one of our favorite trades. I mean, I like the rockstar better because we have support and resistance behind it, but we get a lot more opportunities trading. Now, no, this is just the example. You flip it over, it works exactly the same way in the other direction. I'm just showing you on this particular example. But no, we're buying and selling all the time. All right, so this is actually one of the very first pullback trades that we started trading. This was before we added divergence. This is called the speed tick trade setup. So we don't end up with divergence here, but we still trade this trade setup, although we get a lot more with the divergence than we do here. But again, it looks like the same thing. Price is channeling. Breakout bars are a bit bigger. Did you, Terry, by any chance see the the webinar from Ninja Trader that we did for Ninja Trader. Okay, so you're asking me about things that were in that when I discussed that we're about being trend traders or reversion setups. That all depends on which trend you're talking about. If you're looking at the long-term trend and we're taking buying and selling trades inside of a long-term trend, then at some point, if you want to call it reversion, that's fine. We don't really care what you call it. We're trading pullbacks from a trend. Typically, they're going to be the short-term trend. So we have an uptrend here regardless, but we're looking for that pullback when the trend has pushed as far as it's going to go until the people who are in this market and have these trades on start taking their profits, which is what causes price to now pull back and rest a little bit before it decides what it's going to do. At this stage right here, this could be a simple pullback and then it takes off again like it did here, or it could be a reversal, because we know that a reversal is going to happen also, right? It happens every day. We don't know exactly when or where that's going to happen. That's why this is our sweet spot. We don't know after we hit our sweet spot of a few ticks. We don't know if price is going to keep going or if it's going to keep dropping. We don't know. We don't have that information. That information is yet to come into the market. So we don't have it. So we want to get in and out quickly. Okay? So go back and watch that part of that video again, and you'll understand better what it is that we're doing and our logic on these trade setups. Okay? We're just looking for good opportunities. We're not going to get caught up in whether we're trend or counter trend trading or reversion trading. We don't get caught up in that. We're just looking for good opportunities to take trades with a high probability of them being a winner. All right. So we have momentum increasing like the previous trades. The bars are becoming larger. Okay. That means there's more movement inside that bar. And this was the first thing that changed our trading for us. This is when pullback trading became a thing for me. And then eventually for the people that were in our trade room 15, 16 years ago, which there's still some trading with us today. There are people that trade with us that have been trading with us for a few weeks, and there are people that trade with us in the trade room that have been trading with us for 15 years. So, and you'll meet, if you guys want to come to the trade room, you'll meet them. They're there. Most of them just sit quietly and trade with us. They've already heard everything I have to say over and over and over again. So the bar becomes overbought. That's the pink outline. It slams into the major resistance. If the next bar opens 5 ticks or less from this resistance, then I'm going to short it right here. Now, why 5 ticks or less from the resistance? Well, remember, I have a 7-tick stop. We have qualified this as a good potential speed tick because we actually qualified this line of resistance as having value. Now, how did we do that? Price came up, hit that line, and then backed up. And it may have hit it more than once and then backed up. So that has told us, okay, this line, sorry about that. This line has value to the other traders in the market right now. They're paying attention to that line. They don't want to push across that line. So we've now confirmed, okay, this is a good resistance line. If this bar opens 5 ticks or less, then we're going to short it. Remember, we have a 7-tick stop, which is on the other side of that line, right? that 7-tick stop is right here. Well, if price decides it's still got a little bit of movement left in it, it can come up here, hit that line again, hit that line again, hit that line again. But our stop is on the other side. That's why 5 ticks or less, then I'll short it. If it opened down here, nope, doesn't qualify. It would if it had a rockstar on it, but as a speed tick trade setup, 5 ticks or less, okay? To be honest, we get a lot more of the naked rockstar trade setups than we do the speed ticks, okay? So let's look at this again. This is what we had for in the Ninja Trader event. This is just a video of some of our trade room trades, okay? And there's winners and losers in this video because I know everybody doesn't want to just me to cherry pick everything. So now look, this bar we had, let me back up. Here's a channel, right? Breaks out of the channel. Hard drop. Look at the color of this moon meter. It's like a light gray, almost white. We have our speed tick. We have our oversold. We're oversold here. And our pullback alert. We have a lot of things going on this bar. Look at all the indicators that are saying something's about to happen here. So in the trade room, I'm saying, okay, watch this, whatever instrument it is. And if it opens with a rockstar, I'll buy it. So there it is. There's the rockstar. Now, if I could get that on the open, that's where I'm going to buy it. But you can see it actually backed up. It's hard to see on this video, but it backed up here. Potentially, I could have bought it here if it wasn't too fast. I could have bought it at a better price than the open of the bar. And I'll say that in the room. When I do get filled, I'll let the room know if I've got a better fill than the open of the bar, which is what we're looking for, okay? And then our 5 ticks, and it's done. Trade's over for me. Now, I hit my 5 ticks. Previously in my trading career, I would have watched this go on and on and on. And it would have killed me that I didn't stay in the trade. It would have just killed me. But instead, now I hit my +5 and I'm done. I'm done with the trade. I don't care what it does. I'm done with that trade. And a lot of our traders have done the same test that I did. They go, well, I'm just going to put on a trailing stop and I'm just going to watch it go. I tested that for about 6 months, and a lot of other traders have too. You really don't make a lot of traction. You get a lot of the trades coming back, and you don't get as far as you think you're going to with doing that. Please ask me, and I'll be happy to answer any of the questions. A stop loss is when price hits your stop and you're out of the trade. A trailing stop means as price, if you've got a 7-tick stop, but price continues to come up here, your stop moves up. It follows price all on the way up, okay? So it's a trailing stop. Okay. Because of experience and copious amounts of testing. Lots and lots and lots of testing over the years, and I found that the 5-tick target and 7-tick stop was my personal sweet spot. That's where I started gaining traction at this. Again, once you've mastered the setups and you know when to get into the trade, if you want to do the work that I did and test and test and test and test different targets and stops, I would never discourage you from doing that. I would never tell you that that's wrong, okay? You could absolutely do that, and you may come up with something better. What I've come up with is something that works great for me and has for 18 years. And I just share that with folks, but I never say you have to do it my way or you're doing it the wrong way. Okay? So here's price slamming into that line of resistance. We got our speed tick. We're overbought. We had a great big bar jump out of this channel. And now we're just waiting for the open of the next bar to make our trade decision. And there's a speed tick trade setup. It's less than 5 ticks from that resistance. That's where I shorted it. I don't know if this is one of the winners or the losers. See how resistance kind of held it? And there it goes. Then it drops. So this is very typical that you want to see it hit the line. It hit the line. It confirmed that that line had value. And then the second time it hit it, it also got rebuffed. Okay. Now we're oversold. Pullback alert. Rockstar. As this bar is dropping, I'm telling the crowd, okay, if this bar opens with a rockstar, I'm going to buy it. Oops. Well, it went up. Let's see. So anyway, this is just the same thing. I can go further and show you some things that you didn't see on Thursday. All right, so this one, as price is dropping, I'm watching this countdown timer, right? So I know when the next potential is. Now, right now, there is no potential trade setup. And why is that? There's no line of support down here. This is not oversold, and it does not have a pullback alert on it. So at this point, with 9 seconds to go, I'm not even saying anything on the mic. Now, it's not my job to tell you when to trade. All I do is I try to help. I try to help alert people in case they've drifted off and gone to sleep or whatever. But the expectation is you're a trader, you're going to be watching this, and you'll be watching the same thing I am. All right, so we're dropping. We've got a speed tick. No reason to believe that I have a potential for a trade setup. Whoop, look at that. 3 seconds to go. Suddenly I get a pullback alert. Now I know if the next bar opens with a rockstar, it's going to qualify for that naked rockstar trade setup. And there it is. So that's where I put on my buy order or better, either the open or better. If I got filled down here, even better. Yeah, thanks, Keith. Yeah, for anybody that's asking questions that you just want to know about stuff that we do in the trade room and stuff, Keith is always here, happy to help. He doesn't work for me. He's just in the trade room. He's one of those old timers that's in the trade room and has been for many, many years. And so he's always here to help me, and I couldn't appreciate it more. He does a great job just helping me out, answering the very straightforward questions. All right, there's another one. We get these all the time. And this is what it looked like 18 years ago. No, not that long ago. We have made some additions. So this trade could have been 10 years ago, or it could have been yesterday. They look exactly the same. We have a lot of people that drift away from trading and then they come back and they don't have to relearn it. They have to practice again. They have to start building their confidence. Oh yeah, that was a loser. Okay. Just to show you that, yeah, we do take losses. It does happen. But I'll show you the stats here in a minute. So this was also a trade entry. This was a speed tick setup, and that one was a winner right behind it. Okay? So I could show you these all day long. It's the same thing over and over and over again. All right? So here's the data I'm going to show you, and I'll show you more about it, but this is how it breaks down. Over the last 5 years, we've counted almost 8,000 trades, which is, if you break it down, we have about 250 trading days in a year. We trade about 3 hours a day. On average, a little over 6 trades per session, which is about 2 trades an hour, which means the rest of the hour we're generally just sitting and waiting for the conditions to present themselves to us. It's like waiting on a bus. We're not trying to figure things out and doing a lot of analysis and watching the news and making sure that we're doing what the talking heads are. We just don't get into all that. This is like waiting for a bus. When your bus shows up, you get up and you get on the bus, and that's all there is to it. We're not going to try to build a bus. We're not running around out in traffic looking for a bus. We're not jumping on the wrong bus. We just wait for our bus to come back or come up and pick us up. Okay? So our average wins are about 5 ticks. Our average losses are about 5 ticks. Remember, we're talking about managing our trades. So we do trade management, and on whichever ones of those, like I said, sometimes we manage it up to a -1, -2, whatever. So on average, our losers are about 5 ticks after trade management. So the totals I'm about to show you, all of the fees and all of the commissions have already been deducted. Remember to keep your questions. If you want me to answer these questions, remember them and come and ask me again here in just a couple minutes. We're going to get to the Q&A, and I'll go through. I'm not going to go back through the questions. So I want you to ask me again whatever it was that you wanted to know that I may have skipped. Okay. So here's the data. This is the data and these are the numbers that you're going to, most traders are most interested in. Over the last 5 years, our trade room trades, this is all collected by one of the traders in our room that has been there for a long time. He's a numbers guy. He used to be a budget analyst for a big corporation, and now he's a day trading. And so he's a numbers guy, and he loves collecting this stuff. So we started posting this so that people could really understand the edge that you can enjoy once you have gained the experience from practice. We teach you how to practice too, that you could expect. Okay. Now, the numbers that you guys are most interested in, this one and this one. This is a per single contract traded. Okay. Now, if you trade multiples, these are the numbers that you'd be looking at. So initially, this is all you need to know. This is what you want to know. You want to trade something where your probability of it being a winning trade are higher than it being a losing trade. All right. 5 years of results. This is what it looks like for the traders in our trade room. Okay. Now, if this is something you decide you want to do and you want to jump in and you want to join our trading family, we'd love to have you. Because of this, you see the golden ticket thing on the left-hand side. I'll do a 1 to 3 hour training session for you, and we'll have a private session where if you've had problems with trading, you have emotional things that you want to get through, I've done it all. I've heard it all. I've been through it myself. I can help you get everything set up on your computer. We'll give you a tour of the members area, a tour of the documentation. wiki, the education materials. I'll show you the new ladder trader and tips on using the ladder trader for trading and trade management. Anything you want to know about NinjaTrader, I've been using it for a very long time. We can have these sessions that'll help get you started with us in the best and most efficient way. Okay. So here's the offer for you guys for attending, and for those that attended the event on Thursday, we're going to give you 20% off. You get on any one of our programs. Okay. And you can go to our shop. Keith was nice enough to put that in there for us so that you can click on it. And we take the any credit cards. But the nice thing is we've been doing this so long, PayPal has provided us with the ability to offer a pay monthly for U.S. citizens. I don't know why they don't do it for anybody else, but only for U.S. citizens can you do a pay by month with PayPal if that's the way you want to go. Okay, now I'm going to start from this point forward, and I will start answering questions. If those of you that don't want to stick around for questions, I appreciate you coming in today. I know that you got a lot to do on weekends, but I hope you found this informational. We will be posting this video. I may not have all of the Q&A in the video because sometimes that can go on for a while.